I think for a very, very long time, the US dollar and the US Treasury have been the center of the financial universe globally. And for the last several years, what we've been experiencing, I believe, is a break from that and a transition to a new system that, as Zoltan Pozsar, one of my favorite analysts, used to run the part of the plumbing of the New York Federal Reserve, and then now I believe he's at UBS, but he talks about a system called Bretton Woods III that we are transitioning into.
Welcome to Discourse with Christian. I'm your host, Christian White, and today's guest is Andy Schectman. Andy is the CEO of Miles Franklin Precious Metals. He's a veteran of the precious metals industry with decades of experience. It's an honor to have him as a guest today. Andy, thanks so much for being on.
Pleasure is mine, Christian. Thanks for having me, bud.
We'd love to start off asking you, what's your current take on the global economy and financial markets?
Yeah, I mean, you can go a million different ways with that for sure, but I think when we talk about the global economy, to me, is one that is experiencing a change, a drastic change in every single way. I think for a very, very long time, the US dollar and the US Treasury have been the center of the financial universe globally. And for the last several years, what we've been experiencing, I believe, is a break from that and a transition to a new system that, as Zoltan Pozsar, one of my favorite analysts, used to run the part of the plumbing of the New York Federal Reserve, and then now I believe he's at UBS, but he talks about a system called Bretton Woods III that we are transitioning into, where Bretton Woods I is when the dollar took over for the pound sterling at the end of World War II in 1944 and became the world reserve currency, with the currency tied to gold at a fixed rate, $35 an ounce, to foreign governments who would ever want to exchange their dollars into gold. So the dollar was as good as gold. Bretton Woods II loosely would be at the end of 1971 when Nixon closed the gold window, severing the tie to gold, making our currency in essence fiat. 2 years later, Kissinger went to Saudi Arabia and struck a deal with the Saudis where we would protect the Saudi kingdom and they would value oil globally in dollars and reinvest all the excess proceeds that they would have from those sales into U.S. treasuries. Loosely, that would be Bretton Woods II. Now, ironically, last year, which marked the 50th anniversary of that signing, the Saudis decided to not re-up it, the exclusivity deal. They said, we'll still take dollars, but not just dollars. And the door was left open. Transitioning to where we are now, Bretton Woods III, a system that will be defined by commodities and transparency, a la blockchain. And so when we look at what's happened over the last several years, we've seen a transitioning away from U.S. treasuries as the reserve asset of the world into things like gold, where the Bank of International Settlements, which is the most powerful bank on the planet, in 2019, through the Basel III agreement, reclassified gold as a tier one high quality liquid asset, in essence, as good as cash on their balance sheet, which forever it's been considered a tier three asset. And in essence, what you're seeing here is that for the first time, there is an asset that the central banks are now valuing perhaps even higher than U.S. treasuries. And if we look over the last really 25 years, gold has doubled the performance of the 10-year treasury with no counterparty risk. And that's really the big issue here, is that an administration that imposes sanctions on countries, as an example, Russia, where we in essence defaulted on $5 billion worth of their treasuries we were holding, took the proceeds and gave them to the Ukraine in the form of weapons. Now, you can, if you just suspend any thoughts or feelings you have on the war, as the world reserve currency, it is not our prerogative to make those kinds of decisions. I mean, there are many countries around the world who would think that what we did 21 years ago by invading Iraq under false pretenses, looking for weapons of mass destruction, not finding any, some would say we knew they weren't there, destroying the country, toppling the regime, still occupying the country 21 years later, is no better than what's happening in Russia and Ukraine. Now, I'm not passing judgment on that, but what I am saying is that it's not for the administrator of the world reserve currency to be judge, jury, and executioner. And as a result of that, not to mention the mismanagement, the fiscal irresponsibility, and the monetary stupidity that we've exhibited over the years, to where we are now 37 trillion in debt with 180 trillion in unfunded liabilities. By the way, a trillion seconds ago was 31,688 years ago. That's a trillion seconds ago. So we're so far past the Rubicon of indebtedness. We're sanctioning countries. We say we'll give you 100% tariff if you continue to follow this BRICS narrative. Some of these countries, that's not a tariff, that's a sanction pretending to be one. These are the reasons why we are seeing accentuated and increasing, accelerating de-dollarization, a move away from the US dollar as a settlement where countries around the world are trading in their local currencies, and a move away from the treasury as the reserve asset and being usurped by another tier one high quality liquid asset, that being gold. And last year is a prime example. The treasury was up 4%, gold was up 40%. One has no counterparty risk, one has plenty of it. So that to me is the trend that I am paying closest attention to in terms of internationally. In terms of what's happening here at home, with the Trump tariffs, to me, he's kind of, I think, made a mistake with the tariffs. Now, mind you, too, there is something to be said for having our critical infrastructure here at home. Pharmaceuticals, airplane parts, steel. These are the things that, pharmaceuticals in particular, but these are the things that are critical. And in a pinch, if you're reliant on other countries, that's a bad thing. And there's certain nobility in doing that. But the problem that someone needs to explain to the president is something called Triffin's dilemma, an economic theory that says if you are the world reserve currency, you will constantly run trade deficits. Because if the world needs dollars, they need more dollars than we can ever provide them just through buying stuff, through trade. And so we are constantly exporting our dollars, therefore creating an imbalance. And over time, because of the low cost manufacturing around the globe and everyone using dollars, we in essence eviscerate our own manufacturing base, and we create what is in essence a continual trade imbalance. But it's these countries. See, this is the paradox of it all. It is these countries, Christian, that we expect to use our dollars. So we buy their goods for paper that we print out of nowhere, out of nothing. And it is then our expectation that they take the proceeds and buy U.S. treasuries. That's what everyone's done forever. They always say it's the most liquid market, safest market in the world, until maybe it's not. But the act of taking our dollars and the act of reinvesting the proceeds into U.S. treasuries is what has given us a standard of living perhaps higher than we should otherwise have. It is what's kept goods inexpensive. It is what has kept interest rates low and asset prices high. You move away from that. Now, all of a sudden, you have rising interest rates, which lead to slowing economic conditions with businesses who have to lay off people because they've overextended. And after 20 plus years of suppressed interest rates, you have an environment where asset prices really are, I think, irrational. They're not realistic in a rising interest rate environment. In other words, a 3% mortgage that we saw for few years ago and before. Well, what's your house worth at 3% mortgage or 6% mortgage or a 9% mortgage? What are stocks worth at that rate? And of course, as rates rise, we know what happens to the bond market. So I think we have a situation right now where we're skating a very fine line in terms of the way the world looks at us, their appetite of holding our debt, the desire to hold our dollars, in contrast with the desire to break free from the Western hegemony, find other trade routes and platforms, which we can discuss, that have really sprung up a lot right now, and things are transitioning right now, and other ways of holding excess reserves other than U.S. treasuries. And, the old saying, be careful what you wish for. What President Trump is doing on one hand needs to be done. We need to bring home these critical infrastructure manufacturing capabilities. But on the other hand, the ramifications, the fallout, I think is something that we need to be weary of and understand that it will have an impact on our standard of living, on the store shelves, the cost of goods, and ultimately on the reserve status of the US dollar. So as the Chinese curse says, Christian, may you live in interesting times, brother. These are just getting started.
And as it relates to, I mean, obviously no one has a crystal ball. One can only speculate, but what could you share perhaps to the audience, what some things that you are tracking or following that are going to be indicative of X, Y, or Z, perhaps?
Well, again, I mean, one of the things that I am following, before I even say that, when I started in this industry, I was 19 years old, and my father and I started this company on a wing and a prayer in an office the size of a closet in 1989, 1990, before the internet. Least likely cast of characters to have succeeded to where we have. And in fact, my father's middle name is Miles, and his best friend who lent us the money to start the company, $60,000 in 1989, his middle name was Franklin. And somehow we got here. Along the way, my parents also sold their life insurance policies. We come from nothing. And he said to me, the only rule that I have, as a 19, 20-year-old kid, he's saying this to, and he said, the only rule that I have is that you buy some gold or some silver, I don't care what it is, every 2 weeks when you get paid, period. That's it. Or I'll fire you. Cool. That's it. And I did that. And I've owned the company now outright for about 2 decades. And so my father won't fire me any longer. He's still very active in discussions with me, but I own the company, but I've honored my promise to him. And it's the best gift I've ever been given, ever. To understand the laws of compounding, to understand the principle of paying yourself first and speaking to yourself down the road and listening to the fact that life gets more expensive and you better start saving and prioritizing that. And so to me, when I speak to you of gold and silver, it's of wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, anything the world's thrown at it. Here we are 5,000 years after it was mentioned over 400 times in the Bible, and the most well-informed players on the planet, the central banks, are buying it like it's going out of style. So please keep that in mind. I'm not telling people to buy this stuff to get wealthy. It is wealth. You own enough of it, you will be. But this is not something that, to me, you buy to speculate on. You buy it to get out of the way of what most people never see coming. And you can't get out of the way of something you don't see coming. This, if you buy it and own it as a form of wealth, not as something to speculate on, it allows you to sidestep whatever the world is throwing at it. And it has throughout all of time. That's the way I look at it. But I look at a transition into a system that has been based solely on trust. And there was a time when this country was trusted much more than it is now. There was a time where the mismanagement of the currency was nowhere near what it is now. There was a time when we ran surpluses, not massive, massive deficits. And when you look at a large portion of the world that is becoming motivated and sophisticated and wealthy, an increased middle class, that being largely the BRICS nations, which is a growing crowd, I believe that we are at a crossroads because of the things that I spoke of a few minutes ago, the reluctance of the world to continue to want to finance our debt. I mean, look, just last week, we're supposed to have the greatest bond market ever. The Federal Reserve bought $20.4 billion in 3-year treasuries. And then the next day bought $14.8 billion worth of 10-year treasuries. Now, they're not supposed to be doing that. They're not supposed to buy the back end and the middle portion of the yield curve. They're really only supposed to control the front end, the overnight federal funds rate. And by them doing that, it's called yield curve control. They're trying to keep interest rates down on the 10-year, which is what most stuff is factored off of insurance. Credit cards and mortgages, and a lot of these things are based off the 10-year, home equity loans and stuff. So the fact that they're doing that speaks to the fact that, well, hey, there's a lack of demand from traditional buyers. It also foreshadows much higher inflation. because you have to create that money out of thin air to buy the bonds. Now, if you're another company selling a shit, why would you ever want to sell your oil or your goods for dollars that can be created out of thin air and then put the reserves into treasuries where the Federal Reserve can create dollars out of thin air to buy those treasuries? It's insane. You're supposed to employ labor, dig stuff out of the ground, create it, manufacture it, package it into a finished good and sell it to us for dollars that we can just create and then reinvest in treasuries, which we can just buy with created money. There's a disconnect there. And that's where I think things are heading. In essence, what it boils down to is that we are moving away from the dollar, I believe, as the sole settlement currency of the world. And part of me feels that's really where this administration wants to take it. We can get into that if you want or not. But at the same time, we are certainly moving away from a system of selling U.S. treasuries to the world because we have lost a good deal of trust. And, Trump here he is talking about austerity and reining things in, yet we're already over $1 trillion for the year in deficit spending, and he's asking Congress to raise the debt ceiling again. So this is why Fed Chairman Powell has hinted at removing or not aggressively trying to maintain their dual mandate, which is of stable prices and full employment. Well, stable prices mean you try to limit the effects of inflation, and in other words, what they're saying is that they'll give up on inflation to hopefully have a strong economy through low interest rates. But we're at a point right now where we're so indebted. At some point, rates have to rise high enough to meet demand. And here we are with, the Fed coming in and buying 10-year and 3-year treasury. I'm going to look right now, since we're recording here on Tuesday the 13th, and the treasuries were bought last week. I'm just going to look on my phone here, the 10-year treasury yield, because it's been creeping higher, which is the market's way of saying that we have more power than the Federal Reserve does. The market should have more power than a handful of bankers should. And it's up again today, not a ton, but it's up to 4.482 on the 10-year treasury. We're getting close to 5% on the 10-year treasury. So, how much is this really even helping where the Fed has to come in and buy 15 billion worth of 10-year and 20 billion worth of 3-year? It's an ominous sign. So what am I seeing? I'm seeing a move away from the dollar, a move away from treasuries, and a drive towards independence from the Western hegemony. And you can see that in some moves that China has just made. And we can talk about that if you'd like. I find it to be one of the most important things that no one's talking about, maybe more important than just about anything I've seen in quite some time, which will ultimately lead to enhanced de-dollarization or increasing de-dollarization, and ultimately potentially isolation on the global scale, and on the global stage in terms of the way the world conducts business. In fact, I did an interview with Martin Armstrong just the other day where he's calling for Beijing and Shanghai to be the epicenter of the financial world in the next 5 years. The things and the moves that they are making would speak to their desire to do just that. Whether or not it happens remains to be seen. But I guess I'll boil it down to a couple of easy cliches and that, or statements. And that would be, if you are fully invested in dollars, you're potentially looking at going broke. If you are not a contrarian, I believe you're potentially looking at becoming a victim. Now, that may be a grandiose statement and maybe a little dramatized, but in many respects, I believe it to be true.
Now, circling back as it relates to, you highlighted China. I know you've mentioned talks of like a gold warehouse and kind of the relationship with that in Saudi Arabia. Could you unpack that?
Yeah, I mean, so one of the things that has not been talked about enough is the move away from the dollar through the vehicles that that the BRICS nations have been building. And for 4 years, through the Bank of International Settlements Innovation Hub and China, Hong Kong, Thailand, and the United Arab Emirates, they developed bridge technology. It was called Project M-Bridge. And M-Bridge allows these countries to trade with one another using central bank digital currencies, free from SWIFT interference. Right at the end, and I'm speaking of it in the past tense, and you'll see why. Right at the end, Saudi Arabia became the 5th full participant in Project M-Bridge. Now, this is a big deal. The world's largest oil producer, head of OPEC, becomes the 5th full participant in Project M-Bridge, which is a non-SWIFT, non-capable, has no capability or connectivity with SWIFT or the US dollar. So this is a way for other countries to trade using their local central bank digital currencies that the dollar and the SWIFT don't have any impact on. Huge deal. Saudi Arabia joins it. It was fully operational heading into their meeting in Kazan, which was a few months ago. And the BIS, which is a Western institution, pulled what amounts to be, as far as I'm concerned, espionage. I'll get to that in a second. Right before that happened, Dilma Rousseff, the former president of Brazil and the head of the new development bank for BRICS, said we've agreed in principle to a new settlement currency, not a unified currency, but a BRICS settlement currency called the unit. And the unit will be 40% gold backed, deliverable upon request by central banks, and traded over Project M-Bridge. And so these countries could trade in their local currencies and settle imbalances with the unit settlement token, which has a 40% gold backed deliverable option. Well, right at the 12th hour, the BIS and their acting general, the leader of the BIS, I forget what the name of the position is. In fact, his term expires next month. His name was Augustin Carstens. And he said, well, we've decided as the BIS that we can't be involved with this technology where countries would try to avoid Western sanctions. And so we're pulling the plug. Well, after 4 years of developing this, you're telling me Augustus just realized that Russia is the R in BRICS. And so they stole the technology in essence, or brought them to the finish line with an operational product and then backed out and embarrassed them at the 12th hour. Well, they've taken this technology and it's now just called the bridge. So keep this in mind. At the same time, I'll lay the foundation so that you can understand exactly where I'm going with this and just how big it really is, Christian. And that is that, what led me onto the BRICS, which is the acronym for Brazil, Russia, India, China, South Africa. And then, of course, they expanded it. They invited Saudi Arabia, who's kind of on the fence, United Arab Emirates, Ethiopia, Egypt, Iran, Indonesia. These are all full members. 40 other countries have applied, Vietnam being the last. Their next meeting is here in Brazil in about 6 weeks. But so these countries have, in and of themselves, you look at these countries, you have 3 of the 4 largest nuclear arsenals. You have just in those countries alone, 40+% of human population, a larger swath of global GDP than the West has, the majority of the commodity epicenters, producing gold and platinum and silver, and they produce and consume more wheat than the West does, and China mines the majority of the rare earths, along with Indonesia, who just became a full member. They have largest nickel deposit in the world. China refines almost 100%. That's before anything else. Now, what led me on to the BRICS several years ago, and I was one of the only ones in the country talking about it in 2019 for a while, was the Belt Road Initiative, which is was the largest infrastructure project in human history. And China's effort to connect Asia, Africa, parts of Europe, and South America. It's kind of the old Silk Road. It represents right now 75% of human population, 50% of global GDP. And these are largely undeveloped, resource-rich countries. that China comes in and modernizes, builds an infrastructure, develops, builds roads and bridges and maritime channels and gold mines and oil refineries and all that stuff allows them to bring their resources to market, enrich the country, and build an infrastructure. China gets a piece of it. Well, all of those countries are very closely aligned with BRICS, but not members of BRICS. 70% of human population. There are two other organizations. There's the Eurasian Economic Union, all the countries that end in stan, like Kazakhstan, and the Shanghai Cooperation Organization. The Shanghai Cooperation Organization is the largest regional financial and military organization in the world and represents, I don't know, damn well near 30 or 40% of human population and global GDP themselves. Huge. Along with all of these other entities, you combine them into all of this and you get about 90% of human population. The president of Belarus has been screaming to bring the Shanghai Cooperation Organization and the Eurasian Economic Union into the BRICS. And then you get what just happened. So now I've laid the foundation. And then you get what just happened. Just the other day, you had former rivals now forming a united front, something called the Chiang Mai Initiative. And this is between China, Japan, South Korea, 10 or 12 Asian nations. Those are the countries in Southeast Asia, and several of the countries in the Middle East. They're all forming these initiatives to reduce dependence on the dollar, to expand trade in local currencies, and resisting the U.S. protectionism. All right, so you got all of these countries now also in the mix. And then China comes out and says, well, we've just issued the digital RMB cross-border settlement system. That is the M-Bridge, but they're calling it the bridge. And they integrated it right now with 10 Asian countries in Southeast Asia, 6 Middle Eastern nations, which in and of itself covering 38% of global trade. This bridge technology, transactions take 7 seconds. SWIFT takes 3 to 5 days, several intermediary banks converting, the whole 9 yards, 3 to 5 days. So this is 7 seconds with 98% lower transaction fees. And they've connected these countries to it. So really, really big, right? Well, then you get the finance minister from Russia, and this is putting all the pieces together. No one's talking about this. So remember what I just said, the Belt Road, Shanghai Cooperation Organization, Eurasian Economic Union, Asian countries, Middle Eastern countries, 90% of human population all closely aligned with the BRICS nations. Not in the BRICS, 40 other countries have formally applied, or informally, both. But these countries that haven't applied but are tied in represent 90+% of the world, the majority of human population, the majority of global GDP, the majority of all the commodities, the majority of the processing, the majority of the manufacturing, on and on and on. And then the Russian finance minister says, by the way, this new technology will be open to non-BRIC nations as well. Now you open this up to all of these countries on the Belt Road, the Eurasian Economic Union, the Shanghai Cooperation Organization, all these Asiatic countries. And now they can buy and sell their goods across border using their own central bank digital currencies. And the last piece of the puzzle is the Shanghai Precious Metals Exchange, which is growing massively. In fact, the combined volume of the Shanghai Gold Exchange and the Shanghai Futures Exchange is greater than that of COMEX. They are massively growing. And one of the pushbacks that you hear from pundits is, well, China never internationalizes their yuan. Well, the Shanghai Metals Exchange is now opening vaults around the world, like in Saudi Arabia. That will be a part of the Shanghai Metals Exchange with metals stored in other countries, so they can then trade over the bridge technology, their digital yuan for oil from Saudi Arabia. Saudi Arabia then can sell them their oil, and any imbalances will be settled in gold, and the vault is in Saudi Arabia that belongs to the Chinese. They can settle imbalances in gold while internationalizing their yuan and trading over this bridge technology with no SWIFT interference. In fact, the West will have no idea how much trade is going over this. It gives them anonymity, it gives them expediency, it gives them free from the Western interference. And the key to it all is that instead of stockpiling reserves in treasuries, which keep our rates low, our asset prices high, our goods cheap, they will then stockpile gold, which is now rivaling it in terms of its tier one status, which has outperformed it, which has no counterparty risk. And much of the world will now be using as a de facto settlement and reserve vehicle. So the speed at which all of this is increasing, yet our Western media does the worst job of telling us what's happening. You can't get out of the way of what you never see coming. There are very, very, very well-read people out there have no idea what's coming because they're reading the wrong stuff. I spend 3 hours a day and have for 4 years digging, almost five, actually it's been 5, digging and digging and digging it all around the world to find this stuff. And a lot of the stuff I was saying in 2019 and 2020, people thought I was insane. Go back and watch my videos from then. I'm saying this exact same stuff then. Nobody was talking about it. And now the pushback against everything I was saying was that, well, they'll never internationalize the yuan and they will, the BRICS aren't a big enough entity. Well, guess what? They're massively growing, and the ability to open up the bridge technology to the countries they're aligned with but have not become BRIC members is the key to it all. It's the coup de grace, because now it's not just these groups trading with one another. It's most of the world trading with one another using local currencies instead of the dollar, which in essence builds their own economies, and then settling in gold, which instead of buying treasuries, which builds our economy and allows us to build a military and all of these things, like the $1 trillion military bill, which is discretionary, means you got to borrow it. So you put it all together and you can start to see these pieces coming together. You look closely enough and you'll really see it. It's just that no one's really focusing on it. To me, there are very few things that are as relevant and as scary as what we are witnessing right now in real time. And yet it's just underneath the surface. People don't even see it coming.
Yeah, I'm always blown away to interact with people that I know who are financial advisors and such, and a lot of them they're not tracking any of this and such, and so it does say something about, I guess, the establishment, if you will, what they want to push out there and such. Wanted to ask, as it relates to legislation and such going on in the states, real quick. I know you mentioned certain states deeming gold and silver as legal tender. I don't know if you could kind of unpack or share perhaps some thoughts on that.
Yeah, I mean, right now, I believe the number, if I'm not mistaken, is 11. There are 11 states that recognize gold and silver as U.S. currency and making them legal tender within those states, which in turn makes gold contracts legally enforceable in those states. You have somewhere not around 20 states that have it in some form of what am I trying to say? Some form of discovery, research, or in front of their legislature. You have largely in these red states, you have like Florida, where I am, they just passed it. And, you have governors and legislatures that realize what's happening to the dollar and the idiocy and irresponsibility of our monetary and fiscal policy. They're letting their constituents find a way to sidestep that. When you talk about how bad the dollar is being destroyed, I was talking to my dad the other day, graduated college in 64. He said, yeah, I was married. Your mom and I got married that year, Andy, and I could live comfortably with your mom on a $5,600 a year salary in 1964. Think about that for a minute. $5,600, I send a kid to college and it's $45,000 a year. So what's wrong with that picture? And this is something that is continuing and accelerating. So it's not stopping. It just isn't, and it won't. It can't. It's mathematics at this point, really. And so I think that you have, fortunately, some of these state legislatures that realize the importance of an alternative. At the same time, you have very interesting things happening on the federal level. The largest deliveries into the COMEX market that we have ever seen. In fact, the May COMEX gold contract had the second highest number of contracts ever stand for delivery at 9,306. Since then, cumulative deliveries have surged to nearly 16,000 contracts, and that's the largest delivery ever. So it started out on the first day of delivery at 9306. That was second highest. And then over time, after the contracts that are written after the first day of delivery almost always stand for delivery. And in fact, it's the more contracts written after the first day of notice than any time in history. And so you have a country that since November, the United States has become a net importer of gold for the first time I can ever remember. And you know what happened in November? That was the election. And the United States is importing so much gold and silver and delivering it on COMEX. No one's ever seen anything like it. You have Scott Bessent, the Treasury Secretary, who is a self-professed gold bug, who when he ran his last job was running a hedge fund, and the largest position in it was gold. You have Judy Shelton, who I believe will run the Federal Reserve this coming year when Powell's tenure expires. She was Trump's nominee in 2016, although through partisan politics wasn't confirmed. She advocates for issuing treasuries backed by gold. She wrote a book, As Good as Gold. I interviewed her not too long ago, and she said to me, Andy, President Trump has told me, not in so many words, that on July 4th, 2026, he will issue 50-year treasuries pegged to gold. Because no one wants to buy our treasuries anymore. And he understands that. And that's the 250th anniversary of the country. He will do that then. Maybe he's right. She would be Federal Reserve Chairman by that time, if indeed she is the next one. And the first step in reintegrating gold, whether it be into treasuries or backing the system somehow, would be to onshore it. Well, we become net importers. We've imported more and delivered more than the COMEX has ever seen, ever. We've imported more gold than at any time since the end of World War II, which was Bretton Woods, when everyone sent us their gold for us to hold. Because back then we said to the world, send us your gold. We'll protect it here in North America where it's safe, war-torn Europe. Send us your gold. We'll hang on to it. You can take the proceeds and buy our treasuries. And we'll buy it from you at $35 an ounce. You buy it, take the proceeds, buy our treasuries. So you're earning a return on your gold. And anytime you want it, we'll sell it back to you for $35 an ounce. Well, it was that way until 71 when Nixon closed the gold window. So anyways, we've imported more gold since then. Largest deliveries they've ever seen. In the March contract, $4 billion in gold was delivered for a client by JP Morgan. Who's got $4 billion to buy gold? What client is that? Is it the government, the Fed, the Treasury? Who is it? Warren Buffett, Bill Gates? Who's got that bread? Point of it is that's continued every single month, January, February, March, April, and here again in May. Something big is going on. And then on Easter Sunday, Trump has this really weird tweet, starts on Truth Social, then goes on X, and he says, the golden rule of negotiating, he who has the gold makes the rules. Thank you. Well, what the hell does that mean? The point of I'm trying to get at is that something, first you have the BIS, in 2019 reclassify gold as a high quality liquid tier 1 asset. You have all the central banks that have been buying it from 2017, front running that decision all the way up through today, and it's increasing. The central banks buying more and more and more and more. The U.S. is now a net importer of it and stockpiling it at levels no one's ever seen, delivering it at levels the COMEX market has never seen. You have states that are approving it. Something is transitioning with gold. I don't know what it is, but my guess is being slowly reintegrated into the monetary system, and it will continue to edge higher and higher and higher and potentially get revalued as gold is held in every central bank balance sheet in the West in an account called the gold revaluation account. Can't make it up. It's valued at $42.22 an ounce, where it's been since 1973. In 71, when Nixon closed the gold window, and the following year in 72, he revalued gold from 35 to 38, a 7% increase, or devaluing the dollar by 7%. The next year to 42.22, where it stayed on our balance sheet ever since. So he revalued it twice. Over my shoulder, Roosevelt, he confiscated gold in 33. he took those $20 gold coins right there, paid everyone $20.67. If a dozen eggs were a nickel, 67 cents was a lot. People were happy. And then he devalued the dollar just like that by 40%, revaluing gold to $35 an ounce, where it stayed until 71 when Nixon closed the gold window. The following year, he revalued it. Point of it is that we've seen gold revaluation. The head of the Dutch National Bank is screaming for gold revaluation to offset their liabilities. In Europe, it's still at 35 an ounce on their gold revaluation account balance sheets. And many members of the German Bundesbank are doing the same. Even Senator Loomis from Wyoming is talking about revaluing gold and taking some of the proceeds to buy Bitcoin for a strategic Bitcoin account. Point of it is that it's noticed. Now they could market to market at $3,300, and the Fed, the Treasury would receive an injection of approximately $800 billion. The mechanism for that is they issue the Federal Reserve gold certificates, and the Federal Reserve prints money and gives it to the Treasury. It's a gimmick, creates inflation, but it gives them money to put against their balance sheet. The Fed doesn't have access to that gold or a claim on it, but just the dollar value of it. And then you get others like Jim Sinclair or James Rickards, who talk about revaluing gold far above that. The number Rickards comes up with, I think, is 24,000. Every $4,000 increase in gold gives the Treasury $1 trillion free and clear. We give them almost $6 trillion to pay down their balance sheet or to back treasuries with gold or whatever it is that they're going to do. That's a common theme that you're hearing about. So any way you look at it, whether it be on the federal level, the state level, the central bank level, the sovereign wealth fund level, there is something happening with gold. And I will tell you that it's once in a generation happening. And I think it's never been more important to own some gold. And you want to talk about rocket fuel potential, it's found in silver. Both offer what I think is asymmetrical potential, meaning low downside, high upside, but nothing compares to silver, the lowest downside, the highest upside, in an asset that is also being wickedly imported. In fact, the May contract, so far, 13,581 contracts have been delivered, also a new all-time high at 5,000 ounces per contract times 13,581. You're talking massive amounts of silver that are being imported in the United States. Something's going on, man, and it's centered around commodities and Trump's statement, he who has the gold makes the rules, which is an old whatever euphemism or whatever you want to call it, cliche, parable, I don't know. But for him to say that with all this stuff going on, Christian, there's some weird things happening, man. Never been more important to be a contrarian and own some gold and silver. Never.
And as it relates to perhaps some of the conversations that you have with, some of your clients or even, other high net worth or people who are privy to, access to certain information, is there anything else that you could share that would be accretive or helpful to the audience?
No, I think that's, I think what I've said, I hope people will think about. To me, there really isn't anything bigger than that, than to realize that, maybe watch Neil Howe's The Fourth Turning videos. We're entering a cycle change, the fourth turning, where institutions it's typically marked by institutions losing confidence and trust in institutions like the Federal Reserve, like the U.S. government, like the banks, like the corporates, like the stock market. And what happens as we transition to a first turning again, which again is typically marked by some sort of event or war or conflict or something. It's never been more important to think outside the box and to realize that just maybe the road to retirement is not paved with stock certificates and mutual funds. Why is Warren Buffett, the greatest value investor at all, even though he's retiring? He's old, so look past that. But $500 billion in cash, nothing. He pared down his exposure to equities tremendously. Why are we seeing a 7-to-1 selling versus buying by the insiders? And guys like Jamie Dimon selling shares and even talking of retiring, and Zuckerberg and Bezos selling shares. And Why are the hedge funds having their lowest exposure to the Mag 7 in over 2 years? And all of this stuff, I think, it's important right now to think differently. And with your gold and silver, you hope you never need to use it. If you do, you're damn glad you have it. Not just for an emergency, it might be a hell of an opportunity when the dust settles. But if not, you give it to your kids, to your children, your grandchildren, your cousins, your nieces, a charity, a church, whatever. There are very few things that have lasted the test of time that are still immutable and considered wealth. And I think that is gold, that is silver, and the biggest money in the world is showing you that by their actions right now. So that to me is the lesson to be learned from all of this, and I say it with 1,000% sincerity. I believe that I'm right. I've been right on a lot of this stuff. I'm not a magician or a soothsayer or have a crystal ball. I've just spent a lot of time following the dots, and they're all connecting in a very linear fashion. Maybe not exactly the way that I thought, but nonetheless still connecting. And you can see it as a transition away from the dollar. And, you go back through history to the 1400s, you rarely see a currency that lasts longer than 50 years, let alone 100. And we are typically 50 years is the cycle. All of the world reserve currencies. And, if you realize that 1971, we delinked the dollar to gold, at that point becoming really fiat, we're already living on borrowed time. So I guess, think like a contrarian would be the most important thing, and trust your gut and don't listen to the masses. Spend some time. If people worked as hard to protect their money as they did to earn it, they'd be a lot better off.
Well, Andy, I appreciate you taking the time to be on the show today. How can people get in touch with you and learn more about you?
So they can certainly, I have my own YouTube channel in Miles Franklin. The show I do is Little by Little, and we have a lot of new things coming there and some really interesting things that I'm not at liberty to say just yet, but very soon I will, that I think people will really like. The best way to find out about what we do have a website, but for the best prices, send us an email at info@milesfranklin.com. Ask for our price list. Say Christian White sent me, or the interview you saw me on this interview. Any questions you have, precious metals, IRAs, anything you heard on this show, anything, direct them to us. If you want to be contacted, put your phone number down. We'll do so. If you just want the price list, that's cool too. We won't bother you. If you don't get it within a day, check your spam. 1 out of every 10 gets stuck in a spam folder coming from a corporate server. But it's info@milesfranklin.com, and our price list that we will send you will be better than what you see online, substantially, maybe as good or better than anywhere in North America. And that is the best way to find us. And I enjoyed conversation today, Christian. Sorry I monopolized so much of it, but coming on someone's show who I haven't been on before, I like to lay the foundation for what's going on. And if you'll have me, I'd love to come back again and we can pick up where we left off and won't have to lay down the tracks kind of the way that I did. But I think it's important. I really do think that these things are very important because they happen but once a lifetime. And I think we're right there in the midst of it. I would encourage people to do their own due diligence on the things that I've said, the Belt Road Initiative, reclassification of gold, the BRICS, the bridge technology, the renminbi cross-border bridge technology, all of these things that are coming together. Do your own due diligence. You'll see that they're all factual. None of the stuff I've said is make-believe. The hard part is taking those points along the path and drawing a line. And when you do, and take a step back, maybe look at it from across the room, you see a path. And the path is one that leads to a change in the monetary order. So only time will tell where that ultimately is, but I think it's important to at least have your head on a swivel and be aware of what's coming rather than be blindsided by what you never saw coming, thinking you were in the right place, but maybe not. So anyways, I do appreciate it and would love to come back if you'll have me anytime down the road.
Absolutely. It's been an honor, and I've definitely learned a lot on this episode. So Andy, thanks so much.
You got it, brother. Stay well, Christian.
Thank you. You too.